Nike has now been in a bear market for a very long time. It's been about 4.5 years. It topped out at the end of 2021. And ever since then, it's just been in a very brutal bear market. So, a large cap like this, when it's down roughly 70% from its highs, 75%, it's usually a good time to buy from a fundamental basis or just simply buying large cap companies when they're pretty beaten down. However, what I'm trying to do here is use technical analysis to try to make the entry point a little bit better, more aggressive, so that it betters my risk to reward. So, one of the ways we can simply do that is just by looking at the RSI, and this is on the weekly. So, you can see here when it's pretty oversold, right? And which rarely does happen. We had something like that for the COVID crash, and that marked the low. Even here in these bear markets, you can see when it starts to get oversold on the weekly RSI, right? You can see big bottoms are formed, right? And repeatedly, look at where the cursor is. This low leads to big bear market rallies, or sometimes not even that big, but consistently we can see that. So this time, at the very minimum, I'm expecting another bear market rally. But to be honest, I don't think it's just going to be a bear market rally. I think this could be the start of another stronger move. And the reason I say that is because I think we've seen capitulation. Now, how do you see capitulation? Is one way, obviously, is the price sell off is aggressive, which we have seen here. A very strong double digit sell off, but that was also supported by one of the highest readings in volume for this company. So you can see this is the week I'm talking about. And those are typically signs of capitulation. Does it mean it can't go lower? No, it can always bleed lower. Make a little RSI divergence if it goes lower, and of course it's possible. But typically, what happens is capitulations mark the low. So again, so this level of volume, right, which is probably never seen. Yeah, so that level of volume and the price is extremely oversold. It's really as simple as that. I mean, I'm not trying to overcomplicate it. And of course, the backdrop of fundamentals, yes, it's having a rough time, which of course led to a bear market, but all the negative news has been priced in, right? That's where the opportunity is. The worst case scenario has been priced in. So that's where it gets better as an investor. Again, this is more of an investment as opposed to a specific trade, because for this to play out, I would need a few months, right, at the very minimum, because any of these bear market rallies, right, so for example, this one, so it's about 16 weeks. So they're all roughly about 12 to 16 weeks, which is basically 3 to 4 months, right? So even over here, I'm expecting at least a few months of a rally, which is more of, it gets into, yeah, you can call it a trade, but it's definitely a longer term trade, a swing trade. So I think sentiment is terrible in the stock, which is obviously the best time to buy. And it's also supported by some insider buying. So that has recently picked up as well. There has been some insider buying. So clearly they know things we don't know. And for that reason, basically, those reasons, I am definitely very bullish on this stock. So as of right now, that's my entry. If I zoom in here, uh, one of my first entry is right now, and a stop loss would be a break of these lows. But that doesn't mean it changes my thesis. It just means that I would play things differently. So what I mean by that is I have multiple accounts. So in my one of my accounts, my entry right now is here. So at 45 with a $4 stop loss for 41, and that would take me to another support zone. So this area in green between 41, yeah, so this zone here, that's another support zone. So that's when I will start to get a little more aggressive if nothing has changed. If nothing has changed. If it does, then of course, I would have to think again. But as of right now, that's my setup. All right. Thank you.